Okay. Hello, everybody. Welcome to Perry Home Solutions
We're back.
update. We're back. Yeah, we're back. So anyway,
Yeah, malfunction there.
well, I don't know where we're back from. We just start. This is a brand new video, so I don't know where we're back from. But anyway, go
From
ahead.
the last video, obviously.
A guy just walked by. Anyway, so back to our.
Okay.
Julie, what are we talking about today?
All right. Today we're talking about all roofs. So something that comes up a lot, especially in this area where we're, like Point Beach and South Palm Beach, I guess in general. There was a lot of building that took place, I would say in the 90s, like late 90s, early 2000s, right? So right about this time, there's when those roofs start to have issues. They're now 20, 30-year-old roofs, and that's usually when they start to need replacing, right? So more and more we're getting into situations where we're selling a home or we're having a buyer that's purchasing a home with an old, what they call original roof. So let's talk about that.
Original.
Quotes.
They call that, otherwise known as original.
How is the roof original? Oh, of course.
Yeah. Sometimes it's not even original. I mean, sometimes a roof was replaced 20 years ago. We're selling one right now. It's not the original roof. It was done in 2004. And so right now it's 2023, so it's 19 years old. And so that's not original, but it's now on its situation. So anyway, what's the question? Where are we at?
There's always, I'm just kidding. So let's talk about selling homes with old roofs.
Yeah, so it's a little bit tricky. In a recent video, we talked about polybutylene plumbing, and that's a factor. The real issue with these things, like old roofs, as an example, is it's an insurance issue. It's not. Mortgage companies don't really care that much. Even buyers don't necessarily care a lot if the roof's in great condition.
Right.
But the problem is insurance companies don't want to insure them, especially lately. Here in South Florida, since 2021, 2022, insurance has become a lot more challenging than it was.
Mm-hmm.
And so, older roofs, they've been scrutinized a little bit more because what happens in South Florida is everybody has their old roof and nobody pays to replace a roof unless they have to.
Right.
And what they do is they wait for a hurricane to come and take it to Oz, and then they want the insurance company to pay for it. And they did. That's been the MO of Florida for a long time. And the problem is the insurance companies don't want to play that game anymore. And so, if you have an old roof, it's a challenge. Now, the question is, there is a threshold at which it's too old to insure.
Mm-hmm.
And so that's what you want to determine. And, usually that threshold is somewhere around that 20 to 23 year mark.
I think they want to see, if I remember correctly, and check with the insurance agent about this. I want to say maybe 5. I think the insurance company wants to see at least 5 years left
of useful life on the roof.
Useful life, yes.
Yeah. And of course, if you have a big old hole in your roof, that's a challenge.
Yeah.
If you got a leaky roof, because for the insurance company to insure it, what do they want to see?
Safe roof.
No, I'm saying, what is the literal document that they look at?
Oh, that's the 4-point inspection.
And what is a 4-point
the wind
inspection?
mitigation.
Well, both.
Well, both actually.
So
what specifically wind mitigation?
What is the 4-point? So people know.
So the 4 points is the 4 main components of the home. So roof, electric, HVAC, and plumbing, I believe.
That sounds about right.
Yeah.
Yeah. So you have to have an inspector do the 4-point inspection, submit it to the bank. So not only does the roof have to have useful life left, which is a factor. Now the insurance company dictates that. It's not dictated by the inspector or anybody else. But the inspector will uncover if there's any current issues with the roof, and the insurance company will also take issue with those issues as well.
If there's
there may be an issue.
deficiency in your roof.
Yes. So anyway, that's the thing about roofs. If you have an old roof, it doesn't mean you can't sell it. We've actually sold a whole bunch of houses with old roofs.
Yeah.
I don't know what it's been lately, but apparently our biggest selling reason nowadays is people have old roofs and they don't want to replace them.
Right.
And by the way, if you have an old roof and you don't want to replace it, feel free to give us a call because we are some of an expert at selling homes just like yours. Yes. So anyway, moving on.
Very good.
That was a shameless plug and shill, but go ahead.
Okay, and then also to continue our mortgage hacks series. So what that, in case this is the first video you watch, we've been talking about how the interest rates keep rising and it's becoming more challenging for buyers to obtain a mortgage or to have a reasonable payment because now interest make everything more expensive. So how mortgage hacks is what we call creative ways to still make it work so you can purchase a home and kind of navigate the interest rates that keep going up.
Yeah.
So mortgage hack of today is called the 5-1 ARM.
So I'm going to ask you about that.
Oh.
You're going to be our 5-1 ARM expert today.
Okay.
But let's talk about
Not
Chelsea
that arm.
Guns? Wow. That's going to be the clip for the video. That's going to be the picture. Where were we? What was I saying?
5-1 ARM.
So remember, the challenge is, let's give a brief mortgage history so people know why you should care about this, right? So number one, so mortgage rates in 2021 were 3%. They went all the way up in less than a year from 3 to like 7.25%, which is the highest rate of increase that we've ever seen in history of mortgages.
Mm-hmm.
So that is a bit of a shock to the system. And then what we saw is around the beginning of 2023, mortgage rates dipped a little bit. They went from the 7.25 down to maybe the lower 6s. You know, still nowhere near where they were, but certainly at least a nice little dive from where they were at the absolute peak of 7.25. Now, recently, we're shooting this video in late February, right? And so the interest rates have now creeped back up, and they're now getting up into those higher 6s again, right? So these interest rates are extremely important. They affect buyers, obviously, and because they affect buyers, they affect sellers. If a buyer's affected and you're selling, you're affected.
Right.
So anyway. So these mortgage hacks are designed to grease the wheels. They're designed to give you an opportunity, if you're a buyer, to be able to lower your costs or create an environment where it makes more sense to buy a house or it's cheaper or whatever. And as a seller, we're offering different strategies, things that we can offer to buyers that will make it more tantalizing for them to buy your house. And in some cases, it could be the difference between them being able to buy your house or not, right? Which is obviously a huge hurdle. So anyway, on that note, our mortgage hack of the week is the 5-1 adjustable rate mortgage ARM, which is blasphemous to even say. So what is a 5-1 ARM? Okay.
So what that means is you have a fixed rate for the first 5 years of the loan, and then it becomes an adjustable rate, and it adjusts every year until the end of the life of the loan, I guess.
Mm-hmm. And what's the advantage to a 5-1 ARM?
So the advantages will be, let's say you're a buyer and you're not planning on staying on that home for very long. So because the lenders, you're taking risk in the sense that, you're kind of betting that maybe the long-term interest will go down. Mm-hmm. So in next maybe year 6, you can refinance and go to a lower rate, or like a fixed rate or something like that. But you're taking the risk. What if they keep going up, like they did in the 70s or something? They just kept going up and up and up.
Yeah. Well, not only that, also in the mid 2000s.
Yeah. So you're taking the risk of, you're the one taking the risk. Sometimes I think the lender want to incentivize you they offer you a lower fixed rate for that first 5 years. So they say instead of going for the 30 fixed rate that everybody will be getting, they might offer you something a little bit lower if you decide to go with the 5-1.
Well, the interest rates on adjustable rates are significantly lower, right, especially for those first 5 years.
So they might be more appealing for those first 5 years. So that will be an advantage. If you know you're not going to be there much longer than 5, 6, or maybe less than 10, and you're willing to take that risk, you're taking advantage of that.
Well, especially if you know that you're going to be there for 5 or less.
Right.
It's probably a better option.
Right,
and you could save a whole bunch of money, and it's certainly a heck of a lot easier, financially to qualify for that mortgage in that house in that circumstance. Right. And of course, at the end of the term, you could just refinance it as well, right?
Or if you foresee maybe some positive changes with your finances, it's going to put you in a better position, and 6 years and beyond, and you'll be okay with maybe having a higher interest rate at that point, but you want to keep your expenses low today, then that will be another advantage.
Yep. So that's the 5-1.
That's it.
All right, V, was there anything else we had on our agenda?
I believe that's it for today.
All right. Thank you for joining us, everybody. Have a great day from Perry Home Solutions.
Bye.